Good morning, guys. Welcome to the CAM Financial Stock Market update for November 2nd. So today, I really want to focus more on, just the month of October. Just going to go through my results, with my three different investing systems that I use. We'll go over what happened in each of the markets as well, or the indexes as well, to do a comparison, my systems, and then just a couple other things to mention, as well as I'm going to try to get the FinViz screener up, see how things went yesterday. I'm going to get that pulled up, so I've got it in the background ready to roll when we get there. So alright, let's take a look at the month of October as a whole. So let's start with, the first system that I ever started using takes a quantitative analysis. I'm looking at specific sectors first. That's the primary, is finding a sector that's going to perform well, or that is performing pretty well. From there, I'll go into that sector and take a look at do some financial analysis between each of the companies within that sector. And then lastly, if I've got a couple companies that are pretty close, I'll take a look at the charts, the technicals, and see, okay, well, this one is in an uptrend, this one's in a downtrend, so we're going to go with the one that's in an uptrend, obviously, rather than the one that's trading down. So that system, actually, for the month of October, was down 3.1%. Had a pretty rough month, primarily driven, I can tell you, by Korean Electric Power, ticker symbol KEP, Icon Enterprises, which was down a little bit as well, and then the other one is HCI, the insurance company in Florida. So that was probably the three biggest drivers. PDLI was down a little bit as well, and forgive me because I'm blanking on what that, it's a biopharm, I do know that, but I can't remember exactly what the company name is. So those were the four biggest down. Well, maybe, okay, so maybe we'll throw in a fifth, is DHY, the a high yield ETF bond fund. So I'd say those were my five worst performers. Let's take a look through and see who the best performers were in the system. Ally Motion Technologies is probably one. Compass Diversified Holdings is definitely one. TGS performed pretty well. Ruger performed pretty well for the month. And let me take a look. Alright, there's probably that might be the best one. San Jose Water Company, SJW. I definitely did pretty well. Psychomedics also performed pretty well. It was almost $4 a share in the month of October. And that takes us, that would be the list for the ones that performed pretty well. So PKG was alright. It was pretty much flat, but it was alright. So like I said, the total system ended up down 3.11% versus the S&P down 1.94, the Dow down 0.91, and the NASDAQ down 2.31. So we underperformed all three indexes this month. Let's take a look at the technical trading system, the one that is strictly based on technicals. It was down 2.54% versus again the S&P down 1.94. So that actually underperformed all three indexes as well. And we'll go to the last system that was down 3.19%. That's the one that focuses on purchasing undervalued companies. It was also underperformed each of the indexes. So needless to say, my three systems had a pretty rough month this month. But for the year, I'm up 5.4% on the technical trading system, up 13.7% on the quantitative system, and I don't have the year, well, but I can tell you that since I started the other system, the undervalued purchases this year, it's down 2.45% since I started it versus the market up 1.13%, so, or 2.35 to 1.13. So we're definitely trailing the market right now on that system, but well ahead of the market in the Quanta Funda Techna system, and outperforming in the technicals as well. So I've talked to a few different people recently. One of the things that I always try to focus on is to put your first $10,000 into mutual funds. That way you're diversified, and then you can start to focus on picking good companies. So with that in mind, my mutual funds in the last quarter, so I sold off some of my mutual funds back in July, as the market had performed pretty well from April till July. But then since July till today, they've definitely been down. So we've been adding back into the mutual funds. I rebalance my mutual funds on a quarterly basis. So we're down there. So I'm pulling some of the cash out of the IRA holdings and putting that into pulling it out of cash and putting it into holdings. So just kind of to give an overview of what's going on right now. We'll take a look at the markets yesterday. Again, you know, the Dow down 0.6, the S&P down 0.68, NASDAQ down 0.69. Pretty much red across the board except for some green in healthcare and the basic materials sectors. There's some bright green in the tech. Let me take a look and see who that is real quick. Is that Fidelity National Information Systems, I believe. Can't get to pull up here so I can read it. Yes. And then as well as Harris Corporation in the telecom communication side. Tractor Supply performed pretty well, up 3% yesterday. Wynn Resorts up 3.89%. So there's definitely still some, you know, the companies that are meeting, exceeding targets are still performing well. Again, we're seeing, I think I heard the stat yesterday, Through last week, basically 50% of the S&P 500 had reported, 75% were above estimates. So earnings are definitely driving the market. Yeah, well, I shouldn't say driving the market because the market's actually down a little bit, but the companies that are outperforming on earnings are holding up versus the other companies that are taking a hit. So that's important to remember. Right now we're in a market where earnings are going to be important. We got now the inflation. They're indicating there was a 2.9% growth in the last quarter. So get ready to see the rates increased finally by the Fed to see if we can get them back to a more standard market where the savers aren't beaten up quite as badly. That way the only place to find yield is not going to be in stocks. You'll be able to actually get some decent yield into, by buying or getting into money market funds and that sort of thing. That's still a few years off, but I expect to see rates continue to increase here as we try to cool off the inflation. So that's it for today, guys. Take care, and we'll see you next time.